Another sector where we saw an increase in transactions in 2013 was the development land market. If we count agricultural sales, we had a phenomenal increase in transaction volumes. Stripping them out and just focusing on non-agricultural sales, there were 75 transactions concluded in Ireland last year, totalling between them almost 200 million, up fourfold on the previous year. The demand for land is driven by improvements in the occupier markets, office, industrial and retail, and in the Dublin market, particular demand because of the supply-demand imbalance in the Dublin housing sector. Both of these fueling demand for good sites, to the extent that premium prices were achieved for many of the sites that came to market, particularly in the second half of 2013. As values slowly improve, development in many instances is becoming feasible again, and this in turn is driving the demand for land. We would expect to see further escalation in land prices, particularly in the Dublin market, over the course of 2014. There will be land sold provincially as well, although most of the buyers for this will comprise local buyers in the main. The extension of the capital gains tax waiver in the most recent budget for an additional 12 months is significant for many sectors of the market, but particularly the development land, with domestic buyers very encouraged, and undoubtedly this will be an important demand driver in 2014. We expect to see an increase in the volume of land coming to the market this year. In addition to a lot of the small infill sites that formed part of the market over the last number of years, there will also be an increase in large land parcels being brought to the market, sometimes coming to the market as part of mixed-use portfolios. Equally, we're likely to see some of the sites that form part of the loan portfolio sales over the last number of years being carved up, and these sites being offered for sale over the course of the next 12 months. As we move into the next cycle of development in the Irish market, there will be increasing pressure on existing banks to start providing development funding, which at the moment is being provided by a lot of the private equity players in the market. There's a lot of concern in the market about the potential for government to introduce a vacant site tax in 2014. An audit has recently been done by Dublin City Council, which has identified up to 60 sites which are vacant and not being used at the moment. However, there's likely to be a considerable backlash if government introduce such a levy, because penalising developers for not developing sites is not going to stimulate development where that development is neither merited nor feasible in the first place. In summary, a very strong activity level expected in the development land sector this year, with an increase in sites expected to come to the market, both within Dublin, provincial locations, and many places around the country.